The United States has long held reserves of strategic assets. Gold bullion lies in vaults. Oil is stockpiled in underground caverns. These reserves act as a safety net, protecting against economic turmoil and global uncertainty. Now imagine a new asset joining these ranks. Bitcoin. This is the idea behind the U.S. Bitcoin Reserve Plan. The concept is simple. The U.S. government would acquire and hold Bitcoin. This digital asset would become part of the national balance sheet. Proponents argue that Bitcoin offers a hedge against inflation. It also reduces reliance on traditional financial systems. The idea draws comparisons to the Strategic Petroleum Reserve. Created in the 1970s after the oil crisis, the reserve safeguards the U.S. from energy supply disruptions. Similarly, a Bitcoin reserve could protect against a weakening dollar or instability in global finance. This concept is not without precedent. El Salvador made Bitcoin legal tender in 2021. Other countries are exploring similar moves. A U.S. Bitcoin reserve would signal a major shift in global finance. It would solidify Bitcoin's place in the world economy. The U.S. Bitcoin Reserve Plan found an unlikely champion, Donald Trump. During his 2024 presidential campaign, Trump underwent a significant shift on cryptocurrencies. Initially dismissive of Bitcoin, he came to embrace it as a potential tool for economic strength. This change in stance was first evident at the Bitcoin 2024 conference. Trump, addressing a packed crowd, surprised many by advocating for the retention of Bitcoin seized in criminal investigations. This marked a departure from the existing policy of auctioning off these assets. Trump argued that selling seized Bitcoin amounted to giving away a valuable asset. Instead, he proposed holding it, recognizing its potential for appreciation. This marked the beginning of his public support for the idea of a national Bitcoin reserve. The move resonated with many in the crypto community. Trump, once a vocal critic of digital currencies, was now positioned as a potential advocate. This shift signaled a growing acceptance of Bitcoin within conservative circles. This paved the way for more concrete proposals, like the Bitcoin Act introduced by Senator Cynthia Lummis. Senator Cynthia Lummis, a Republican from Wyoming, emerged as a leading voice in the push for a U.S. Bitcoin reserve. Her proposed legislation, the Bitcoin Act, offered a detailed framework for acquiring and managing a significant national Bitcoin holding. The Bitcoin Act called for the U.S. Treasury to acquire 1 million Bitcoin over a 5-year period. This ambitious goal aimed to establish a substantial reserve, comparable in scale to the government's gold holdings. To fund these purchases, Lummis proposed two innovative approaches. The first involved revaluing a portion of the U.S. gold reserves. By adjusting their value on the balance sheet, funds could be freed up for Bitcoin acquisition. The second approach involved redirecting a portion of the Federal Reserve's remittances, utilizing existing funds without incurring new debt. The Bitcoin Act articulated several key objectives. First, it aimed to hedge against inflation. Bitcoin, with its fixed supply, was seen as a potential safeguard against the debasement of the U.S. dollar. Second, it sought to reduce national debt by utilizing existing assets like gold revaluation. Finally, it aimed to bolster the dollar's standing in the global market, particularly against rivals like China. Section 4, First Steps, Executive Actions and Regulatory Shifts. Following his election, President Trump took initial steps towards realizing the U.S. Bitcoin Reserve Plan. One of his first actions was signing an executive order on digital assets. This order directed the Treasury and other relevant agencies to evaluate the feasibility of establishing a national digital asset stockpile. This executive order represented a significant development. It signaled the administration's intent to explore Bitcoin as a strategic asset. The order also included provisions to review and potentially reverse some of the previous administration's policies on digital currencies, particularly regarding the development of a central bank digital currency, CBDC. In addition to the executive order, Trump's administration initiated a series of regulatory changes aimed at fostering a more favorable environment for cryptocurrencies. One notable move was the rescission of Securities and Exchange Commission, or SEC, guidance known as SAB 121. This guidance had created hurdles for banks looking to custody Bitcoin and other digital assets. While Trump expressed frustration with SEC Chair Gary Gensler, whose term was set to end in 2026, he lacked the authority to remove him directly. Despite this, the administration's actions signaled a clear shift in approach. The message was clear. The U.S. was open for business when it came to cryptocurrencies. Section 5. Market reactions. Bitcoin surges on reserve speculation. The U.S. Bitcoin Reserve Plan, from its initial proposal to the subsequent executive actions, sent ripples through the cryptocurrency market. Bitcoin, known for its volatility, responded with significant price movements. The most dramatic surge came in the wake of Trump's election victory. The news of a pro-Bitcoin administration sent Bitcoin's price soaring past the $100,000 mark in December 2024. The cryptocurrency reached a peak of $107,000 mid-month, fueled by speculation and anticipation. Trump's executive order on digital assets triggered another price spike, though less pronounced than the post-election surge. The order's focus on evaluating a national digital asset stockpile reinforced the belief that the U.S. was serious about incorporating Bitcoin into its financial strategy. Market analysts, buoyed by these developments, began to revise their Bitcoin price predictions upwards. Some analysts predicted that if the U.S. government started purchasing Bitcoin for its reserve, the cryptocurrency could reach as high as $800,000 by 2026.